Good speaking with you and appreciate it. We have Neil Bahal, a founder and CEO at Negen Captial Portfolio Management Services. Neil, great to have you with us here. Thank you very much for your time. I mean, you talk about sort of special situations where, we've spoken about those situations in the past. Uh, we've had a bit of a situation in the market overall in the last couple of days, Neil. How are you viewing it, and what is your overall sense, if you have a view? Do weigh in.
So, well, we generally don't have a view on the market that the way we want to do investing is where we are looking at corporate actions and we are investing. So typically we don't have a market view. The market view that everybody seems to already know is that India is, the per capita GDP is very low and that's going to keep increasing. And these numbers are going to look very good going forward. So whatever happens today or tomorrow doesn't really move the needle too much for people like us who are, we have funds and we're investing for the long run. So yeah, we don't have a everyday view, but if stocks are becoming cheaper, it's something which is good for us. It's good for everyone because then you can do your long-term investing. Because on the whole, stocks were a little bit expensive in the general market. All the good companies that you like, they were outside of your comfort zone. So if they're becoming cheaper, I would not be the one to complain.
Got that, and we'll quiz you on which ones have become more attractive and what you've done. But we have had a bunch of stocks from a group which have corrected significantly. Anything falls in your radar view, Neil? There in that space.
So ideally, we don't like to discuss stocks as such, but yeah, I mean, something which really stands out is Ambuja Cement. We don't own it, but Ambuja Cement is a good business and it's not really expensive. It's around the price of the open offer. So, I mean, if it were to fall lower, it would be nice for investors. But from if people are looking to in this group, then Ambuja Cement is the standout that we can have an eye on.
Okay, all right. Hi, Neil. Good afternoon. Good to speak to you as always. Ambuja Cements, that's an interesting one, right? Promoter entity, they bought stake at around 385. 385 is what it is at. And the promoter entity, the new promoter that is, will be infusing money at 420. So we get that point. But Neil, a couple of questions. First, on the cash that you're managing, what is the current cash levels? What are the levels, if you could tell us? Are you all deploying money? And also share a couple of ideas with us. You've told us about a whole host of special situations. The recent one that you all have deployed money with the due disclosures.
Yeah, so I'm always believing keeping cash whenever things are not looking as per your thinking process. So right now in the fund we have 16% in cash. So when the markets were going down, we are one of the few people who are not complaining. If it goes down, so be it. There are lots of ideas that are coming up, lots of demerged ideas which are listing, a lot of delistings happening, a lot of promoter changes going on, and because of the sideshow that is going on in the market, a lot of people have taken special situations and general investing off their radar right now, and they're just too much focused on the noise going on.
Neil, if you can share a couple of those ideas, whether it's a demerged entity or a change of promoters, give us a couple of examples, right? I mean, our viewers will appreciate that. Go ahead.
So the problem is that we always tend to have our own exposures, and it's sometimes better not to discuss actual names. But there are lots of things going on. For example, in the footwear space, there's a company which is demerging, and once that the footwear division basically demerges, and people actually compare that with the listed space where everything trades at 50 times EBIT, 70 times EBIT, that kind of range, and this company will be listing at something like 13, 14 times EBIT. So if you're looking for a demerger in this space, that's something that could make it be of interest. But I would not like to take names because we own these things, we buy and we sell, and it doesn't make sense to take names in this sense.
Point. So obviously you're looking at interesting areas where there's corporate action throwing up an opportunity, and you gave some examples there. What else makes it to your top holdings in terms of either a strategy or a sector? Give us some more color, some more insights.
Yeah, so it's special situation is a way of investing, but the overall picture about India is absolutely fascinating right now. I'll tell you about my space, the way where we operate, the asset management industry, the kind of inflows we are seeing. I talk to other fund managers, and everybody is seeing inflows, and it doesn't matter if the market is going up or down. We are seeing good amount of inflows. And being in this space, I can tell you sitting here that our AUM will be higher in the next 3 years. I know everybody's AUM will going to be higher. AUMs is basically the asset under management. Everybody is going to be managing more money. The mutual funds which are listed, or the wealth management companies which are listed, they are all going to do a lot more business in the next 3 years, 5 years, 10 years. It's a certainty that's going to happen. But investors need to make a basket, they need to understand valuations, and they need to invest in an SIP kind of a format and not be bothered. Yeah, okay, markets may not do good for a year or two, that happens. But in the next 5 years, next 10 years, I can tell you with a fair degree of, in my mind, conviction that the wealth management space will be managing far more in terms of assets. The asset management space will be managing far more. And when that happens, the ancillary space, let's say the depository space, the custodian space, everybody who are listed who are listed currently, they're all going to be having more business. So I see no problem in growth. There's going to be a lot of growth in select space. Even the defense sector, for example. You hear that after decades, people like Germany are spending on defense. Countries like Japan are spending on earning. These guys had not spent on defense after the World War. They were not supposed to, but even now, even they are spending. So there are lots of very, very interesting areas in the market. Some of them, almost all of them, which are good, are expensive. So the markets coming down is actually a very good thing for investors right now who are looking at these very long emerging trends, and you may get good entry points. So defense, asset management, wealth management, special situations, value investing. I think it's a very fascinating story right now, India.
Okay, and a sector that you find fascinating, Neil, is the airport sector, where you've said that India's airport sector needs to be kept under your watch list. It's going through a very good growth period. The stocks listed here currently are expensive. Ones to watch, though, on significant dips. Now, some of the plays, in the airport space, or the growth in the passenger traffics would be Dreamfolks, which is an airport aggregator, a spend on increasing number of people traveling and the kind of credit card spends that they would have with the lounge tie-ups, etc. And the other one is GMR Airports. Now, what would be an attractive entry point? Because here you've clearly said that these stocks are expensive. What is an attractive entry point? How much more of a correction would you wait before you enter in?
I would think at least for, it's not better not to give actual names, but at least 20% correction for the listed space here would be very good for long-term investors, because I can tell you the travel per capita is projected to increase 5x in the next 8-9 years. So when something is going to increase 5 times, then the underlying monopolies in that space, if you get them at a good valuation, then you're set, right? You don't need to look at your portfolio every day, every 2 weeks, what is going on with the market. No, you just leave it and you let it go. But your entry price has to be very important. Valuation will play a key role. And all of these stocks which are coming off, from the peak, if you see across the board in defense, or whether it is airports or wealth management, everything is down 15-20%. If they can come another 15-20% lower, then investors just need to identify the emerging trends, buy the best companies there, and just sit back and relax.
Any other company in the airport space? We named two, GMR Airports, and the other one is Dreamfolks. We're not asking whether you've invested, because you've clearly said that you're still waiting for a better entry point. But is there any other stock which comes in this play?
No, these are the two which investors should keep in mind. And we were invested in GMR earlier when the demerger happened of the airport business, but we are not invested anymore.
Okay, 20% lower. Dreamfolks is already 33% off its 52-week highs, and GMR Infra is down 17% from its 52-week highs. But Neil is waiting for